€77 billion. That's roughly the amount of credit Greek banks have extended to borrowers who can't meet their debt obligations. Like this insurance agent who's come here for financial advice after he lost many of his clients when the crisis hit. Last year, his income was only €6,500. Even by tightening his belt, he can't pay his bills of €1,000 a month.
I have quit smoking, I have quit drinking, I have quit going to taverns, going to restaurants, going to bars. I haven't paid for the loan for the last 2 years. I'm trying to avoid the foreclosure.
Around half the 2 million non-performing loans come from consumer credit and credit cards. Some of this debt has even been taken out in Swiss francs. With the currency gaining in value, borrowers are faced with colossal repayments. It's a practice that's already caused damage in several other European countries, notably Hungary. This lawyer advises people who are heavily in debt. He blames the banks for the current situation.
Banks have been promoting for years these loans, even some months before 2008, to people that were not able to understand what they were signing for.
These so-called red loans account for 1/3 of credit afforded by Greek banks that have faced losses of €600 million in the first quarter of this year. But according to this analyst, the bad loans may be an obstacle to growth, but there's no reason to fear something similar to the US subprime crisis.
The whole system has been recapitalized. The increase in own capital is very huge. The ratio of non-performing loans to capital has been reduced considerably. So it is a problem. Does not leave the economy to go ahead. This is the serious problem. But does not impose a danger unless a major financial crisis will erupt in Europe.
The Bank of Greece has asked the banks to tackle these problems on a case-by-case basis by writing off some of the debt or by extending the repayment period before the end of the year.